Welcome to this webinar on AML challenges in correspondent banking, organized jointly by Fintelekt and the Banking Association of Central and Eastern Europe. My name is Shirish Pathak. I head Fintelekt. We are a research, training, and advisory company focused on AML, CFT, and financial crime compliance. We started working in this area around 15 years back, and since then, our work has impacted banks, regulators, FIUs, and other reporting entities, not just in India, where we are based, but across over 35 countries globally. To democratize the access to high quality and practical AML CFT training, we have also recently launched Fintelekt Academy, which provides on-demand access to more than 100 educational videos on AML CFT. At the outset, let me thank Istvan Dengyel, Secretary General of the Banking Association of Central and Eastern Europe, for supporting a webinar on this important topic and inviting a large number of their members and regulatory organizations to participate. It is my hope that we can continue to support the compliance community in Central and Eastern Europe frequently through the organization of many more such events in future jointly with the Banking Association. Let me quickly explain the flow of the webinar today. We will first have opening remarks by Istvan Dengyel. This will be followed by a presentation by Dr. Elena Scherschneva for about 20 minutes, and then a presentation by Charan Rawat for another 20 minutes. Finally, we will open up the floor to questions from the audience. I would therefore request all the participants to continue posting questions in the Q&A window as the webinar progresses so that we can request the speakers to address the questions after the presentations are done. I'm also happy to announce that all those attending today will receive a participation certificate. To receive the certificate, please make a free registration on fintelekt.academy after this webinar is over, and you will receive the certificate within 7 days. You will also receive a follow-up email from Fintelekt on instructions on how to get the certificate. Let me now request Istvan for his opening remarks. Istvan, over to you.
Thank you very much. Good morning, dear colleagues, and welcome to our today's event. This is the first event we organized jointly with Fintelekt Advisory Services, and definitely not the last one. We like this cooperation, and I'm very pleased that so many people from Central and Eastern Europe have registered and joined today's event. Banking Association for Central and Eastern Europe, BACEE, my organization, was created in 1996 with the goal of supporting transfer of capital, money, funds, and more financial knowledge and technologies to the banks in Central and Eastern Europe. And now this one task is getting more and more important. So we are very happy that we get high quality content with the help of Fintelekt Advisory Services in the AML area. Why AML is so important in correspondent banking? My background is correspondent banking. I started as head of correspondent banking in several banks in Hungary. And I must say that it was in 1990s and times were completely different. That time it was much easier to work with in the interbank market. Now what we see today is a long list of serious problems, including de-risking as a problem number one, closing accounts, difficulty of opening new accounts, and this is explained by the high cost of maintaining correspondent accounts by correspondent banks. So we should find a solution, otherwise competitors of banks will take over the business. And I hope that today's webinar will cover these issues. Regulation, so there's strict regulation requirements, but I would like also to listen to the solutions, technical solutions, what technology can offer to make it easier for the banks to maintain correspondent accounts. So this is all on my part. I will follow and I will be with you. And if there are any questions also, I will be happy to take part in the discussion. Thank you very much.
Thanks a lot, Istvan, for your opening remarks. All right, before I invite our first speaker, Elena, to start a presentation, let's run a quick audience poll to understand the sentiment within the audience. If you can have the first poll, please. So this question says, which factor do you consider as the most challenging in connection to correspondent banking? I'd urge all of you to vote with your preferences. We'll keep it on for about 30 seconds. All right, so we've closed the poll. We have beneficial ownership at the top, followed by checking the source of wealth or funds, followed again almost equally by transaction monitoring and meeting KYCC requirements. So we will request our speakers later to comment on these poll results as well. But before that, let me introduce our first speaker for the day, Dr. Elena Scherschneva. So just a few words about her, although she is well known in that part of the world. Elena is Austria's leading trainer for AML CFT and has worked in the AML area for almost 15 years. Before Elena stepped into self-employment, she served in the Austrian police force and was part of the Austrian FIU for 10 years, with 5 of them as the head of the FIU. Her personal goal is to make practical AML CFT knowledge accessible to everyone who needs it, because she believes that progress starts with sharing of skills. Elena, thank you so much for joining us today and for giving your time for this. May I request you to start your presentation now?
Thank you, Shirish, and thank you also for having me here today to speak to all the practitioners we have all around Europe. That's a very interesting set of attendees that we have here. And well, I will. I'm very sorry that Istvan, I won't be able to give you technical ideas how to address the challenges. But what I will do is I will speak today about corresponding banking from the perspective of criminals, from the perspective of how people misuse these systems, and also, of course, a little bit from the perspective of the FIU. So we will start just with an overview how the whole thing works, and we'll then go into the practical challenges and maybe some ideas how we can address them in future, or what is important for you as a practitioner in the banking area, to the questions you have to ask and the things you have to consider. And well, having said that, when we think back to the poll that we just had, we have seen that there was quite a clear result. Well, not that much clear, but it was 16 people voted for transparency of beneficial ownership to be the most challenging in connection to correspondent banking. And the other issue that you mentioned was the checking the source of the wealth and the funds. What's a very interesting well, let's say result in my idea, because both of the things also correspond to meeting the KYC requirements and the KYCC requirements that you have with correspondent banking. And I think that pretty much shows the problem that in a lot of correspondent banking relationship, people start to focus on the detailed issues like the beneficial ownership and like the source of wealth, the source of funds. And what is getting lost a little bit, maybe, that's my practical experience at least, is the big picture, starting with who is my my counterpart at the other side of the transaction chain. So not the customer, but just the bank. Is that really a good bank? Is that maybe a bank that is already in the hands of criminals or that might be misused? But I'm going too far a little bit now, so we will come back to that topic during the presentation. And let me share my screen so we can just look at how correspondent banking systems look like, even if I'm sure that a lot of you already know that, but there might be some people who are not that familiar to correspondent banking. And the thing is, I'm sorry, so I just lost my slide here. So here we go. The thing is that you have one bank in a country A. So, and you have one customer that might be a natural person, that might be also a legal person, who has an account at that bank and who has the business relationship here. So what we can assume in that case is that the bank A is performing all the KYC requirements, that they do the other AML checks, and everything that needs to be in place. In the meantime, I think all over the world. So I know basically no jurisdiction that doesn't have that kind of requirements. What happens then in correspondent banking is that bank A has partner banks all around the world. So actually for bank A, it's not all around the world. For them, it's just, it will be that first partner that they have. Because what is expected by the customer is to transfer the funds to bank B, where bank in a country where bank A may not have own branches or a direct connection to. So you can imagine that as if you want to go from one city to the other and there is no direct bus connection. So you need to change buses sometimes, yeah? And that's actually what happens here. So in our case, let us put like 3 banks here in between. So what happens is that A goes to the bank and said, okay, I want to send my money to B, where we have another natural or legal person in between, who is also KYC'd and AML checked by bank B. What we also know is that bank B does not know anything about the customer of bank A, and bank A does not know anything about the customer of bank B, because these are 2 complete different countries. So to perform that process, the money starts what we considered before as changing buses by going from country A to country B. So the first transaction is this transaction. The second one takes place here, and the third one takes place here, until in a 4th step, the money is finally transferred to bank B. So now when we look at that picture, if bank B is checking where the money is coming from, then what they see is this connection, meaning that they see the transaction details that are stored in that bank. They see that the sender was probably the customer of bank A, but they have, let's say, the wrong transaction connection to that person. And what is used in practice really by purpose by criminals, and also sometimes from a police perspective, I also made the experience that it is sometimes also, well, let's say kind of supported by the banks, is that they try to put here as many stops as possible. So normally it's not the situation that you have the correspondent transaction from bank A to the first bank and then directly to the desired destination, but you really have a lot of stops everywhere here. And that makes the whole KYC process from, on the one hand, from bank B, who is the recipient of the funds that have, let's say, followed this correspondent banking chain. On the other side, also from every bank that is here in the middle, quite challenging. Because you just don't know anything about the person sending the money, because it's not your customer. And that is one thing that criminals really use and misuse for their purposes. It's also very hard to follow from the side of FIU, for example, because when let's pretend that this bank will file an STR, all that they can say is that the money was routed from here to here maybe, but they can't say where it came from, and they don't know if they're the first one in the chain or maybe the 5th one in the chain. So that makes it all a little bit complicated. So let's process to summing up the challenges that we have here. The first one is that this kind of system automatically brings you to having KYCC as a requirement. Why that? Because when you go back to that slide and you would check here who is the customer of that bank, the real customer of that bank is actually the correspondent partner. So it would be the bank A, it would not be the client from bank A, which means that you need to grip through the bank to the client to get any data. Now we have the fourth and the fifth AMLD, which requires that you need to know the source of funds, you need to know the beneficial ownership, you also need to be able to get all the documentation, or at least to be able to trust that all the documentation is in place when you perform transactions, which is supported by a third party who is also apparently a European or another financial institution. So what you have here in practice is that this access to documentation is very limited. When you receive SDRs as an FIU from a bank who is providing correspondent banking services, it's always the same problem. Sometimes I compare it with, it's pretty much the same as if you're standing on a crossroad and then you call the police and say, oh, I just have seen a blue car passing by. So that's actually the situation that occurs on the side of the law enforcement of the FIU. So you have the information that a transaction was going through your bank, but you actually don't know who is standing behind it at the other side. So to be able to offer this correspondent banking services, it all starts with checking your business partner in a proper way. So you either need some agreements that you will get the KYC documentation that you need if it's needed by the authorities or by any others, or maybe also for your internal financial investigations that you might have in place. And you need to check that when you are starting that business relationship, because it's a very, very common issue that as FIU, you ask a correspondent bank to provide you the necessary information, not even the documentation, but just the information. And it's just not possible because they say, okay, due to the data secrecy and other restrictions, they just don't have access to that type of information, which makes it really, really hard to check if the transaction is plausible, if it makes any sense, and so on and so forth. The third challenge that we have here is the speed of transactions. So in correspondent banking relationships, the transactions are literally gone in a second. And I remember an SDR that we have, their money was sent from Russia to a bank account in Austria, which was not a correspondent banking account, but just a regular one. But this money from the account was just forwarded the same day to another bank account in Switzerland, from there to another bank account in Belgium, and from there to another bank account at an offshore destination. And that was quite an issue, because when you receive the SDR here in Austria, you can contact that FIU, you can contact that FIU. Okay, so in that case, the bank was really, well, let's say, willing to assist the police. So they also gave the information about this transaction chain. So the FIU Austria could then contact Belgium and receive information about this transaction chain. But as you already see, we have here really a chain of requests, and that means it costs a lot of time. So meaning until you have that chain revealed, the money is already a long way gone. And another issue in that correspondent banking relationships and system is that in most of the cases, it's not possible to stop transactions because they go forward so fast. The monitoring is very hard to manage because you don't have the basis information that you need for your KYC process. And that means that the money is gone very quickly. The other thing is that occurs often in connection to correspondent banking is that the transactions themselves are very complicated. It means that sometimes correspondent banks are used where there would be no actually economic sense to use them. So there would be direct channels and still people are using the correspondent banking accounts. The other issue is that behind that customers are often very complicated company structures and company systems. So here the criminals really combine some of different typologies to conceal the source of funds, to conceal the beneficial owners, and that makes it also quite hard to follow. So, and as already mentioned, the information for STR reporting might be quite poor. And I remember that we as FIU, when I still worked there, we really reached out to the banks who are providing that correspondent banking services. And it was really a large discussion to raise some awareness there, because they said, okay, well, but that's the system, so we keep on going the system. And we said, no, that's the system, but you have the requirements of the AMLD, which means that you can go on with your system, but you need to ensure that you know who the customer is, that you know where the money comes from, and that you know what beneficial owner is standing behind it. And that's, again, only possible in a very early stage of starting a business relationship with a bank. These correspondent banking schemes are used very actively, not only for money laundering, but also for fraud and for tax evasion. And when you think back about the media reports that have been published in the last, let's say, 5 years, you regularly have correspondent banking relationships involved somehow in large money laundering schemes, and criminals just keep on doing that as long as it works quite well. So now we have been talking about problems quite for a long time. Let's go to the solutions, or to the ideas how we can act in practice to make it maybe more transparent. And the very first tip from my side, or idea from my side, is really you need to think twice when you select your counterpart. So when you decide to offer correspondent banking relationships, when you select the banks you will work with, you need to get sure that these banks are geographically in an area where AML CFT requirements are met, so that they have no exposed geographical risks. You need to make sure that that's a cooperative bank that would give you information when you need it. And when you have this business relationship, and after 10 times you have asked, you have received 10 times, no, we won't give you that information, then you shall maybe think about if you want to proceed with that business partner, or if you want to have another one, because we have really a lot of banks in the world in the meanwhile. So I think that it's maybe sometimes hard, but it's definitely possible to select your counterparts from a pot with the compliant ones. Yeah. The second thing is that you need to check the correspondence banking chains, meaning that you need to understand where the money is coming from and where the money is going to. And that's really an issue in practice, because I already had some cases where bank employees did not realize that there was a correspondent banking relationship. And that's also a matter of training. That's a matter of internal awareness, because I really had cases where the bank said, okay, but that money came from Austria. And then we checked it with the SWIFT, and then it was, from the first glimpse, it was clear, no, the money did not come from Austria. The money came from Russia to Austria, and they just used another Austrian correspondent bank to make that transaction. But that is something that you really need to get sure that you understand it, or your employees understand that, so that the whole system of how correspondent banking works is clear. And the third thing is that you really need to make sure that you'll receive that documentation if needed, so that your counterpart is also willing. And of course, if you offer such kind of products, if you offer that way to make transactions very fast, then you also need to use appropriate screening tools, meaning that just person screening is definitely not enough anymore here. So you need something that is where you can put red flags, where you can put triggers, where a transaction can be stopped if they meet all the criteria, and so on and so forth. Yeah, so that's actually in terms of the presentation and in terms of the content what I wanted to say. And we have one short comment here. Shirish, do you want to take it now, or shall we spare it up for later?
I think let's take it later, Elena, if you don't mind.
I don't mind.
Excellent.
Okay.
All right, thanks. Thank you so much, Elena, for that presentation. And we'll wait to get your comments on that comment which came in, and also any other questions which may come in over the next few minutes while Charan is speaking. Before I invite Charan, could we run one more quick audience poll? All right, so this is almost a yes/no type of question. Is your financial institution experiencing difficulties in getting and maintaining correspondent banking relationships? Charan, I think this is going to be very useful for you to comment on when you start your presentation, because I think the first
Indeed.
couple of slides are very related to this. So we'll just wait for the poll to finish. All right, excellent. So we've closed the poll now. And again, it's almost equal answers for all three. All three.
Right.
All right. So with that, let me introduce our next presenter, Charan Rawat, who is currently the head of compliance at Rabobank India. Charan has over 32 years of experience in banking with large international banks such as Barclays, Standard Chartered, ANZ, Greenlace, and the State Bank of India. In his long career, Charan has worked across retail, corporate, and investment banking, wealth management in multiple functions, compliance, credit risk, operational risk, and relationship management. Charan, thank you so much for being here with us today, and I hand it over to you for your presentation.
Thanks, Shirish. Thanks for getting me this opportunity, and of course, to be with a large number of international colleagues, I would use the word, and experts that we have had. And I start with some kind of a fear and trepidation that after what Elena has spoken about in such succinct words, it's very difficult to add any more value to that. But nevertheless, I'll try my best as to what I can do. So let me just try to put up some of my slides,
Sure.
which I'll possibly try to give a theoretical concept and color to what Elena spoke so eloquently of issues in practice. So if I can just do that, yeah. So now I'm just trying to put in theoretical words what Elena spoke as to how the whole correspondent banking chain works. So I think she highlighted very well. It's providing services from one bank to another bank, in one country to another country. Now, obviously, as part of the banking fraternity globally, we all follow the rules and regulations primarily with concept of KYC and KYCC that was spoken of. But besides that, what we really have are the FATF recommendations. And FATF recommendations covered not only the basic KYC requirement that we have for our normal retail customers or the legal clients, but also for the correspondent banking business. So while the initial guidelines came sometime in 2012 for the entire industry in general, a specific focus on correspondent banking services came in really in 2016. Now, where I'm trying to speak some of these historical aspects is they've laid down the rules as to how the different banks involved in the correspondent banking chain need to keep the documentation ready, so that when, if any inquiry is raised, any transaction is to be reviewed, whether FIU are coming in or other legal regulatory bodies are coming in, you are clearly able to demonstrate on what basis a particular relationship was started. And I was actually very pleasantly surprised from the poll that uh, there's an equal distribution of people finding difficult to build up correspondent banking relationship, or not finding it difficult, and maybe to a certain extent there are. But if I can speak from a perspective of a European institution, which has been providing correspondent banking services across Asia and Africa, this is a big challenge that both the respondent bank or the banks requesting global services, as also banks which are providing global services, are finding it extremely difficult. So again, I think any KYC relationship that we need to do, any KYC for any relationship, we start with three critical items, and it becomes all the more important when we are doing the correspondent banking, which is, have you done your customer due diligence? And in this case, our customer due diligence is a due diligence on the bank that we are talking about. So let's say hypothetically, if Rabobank is providing the correspondent banking services to an institution in any of the, let's say, the European countries, we would start with doing a customer due diligence in a similar manner that I would do on a legal or a corporate client. Of course, doing a due diligence on a bank is a lot more complex than simply doing the KYC that I would do for a retail individual, a natural person, or a corporate person. And then really comes the most critical aspect, what we call as a transaction monitoring. Again, I would say in correspondent banking, besides everything else, our day-to-day responsibility and risks uh, is actually on transaction monitoring, what really is happening. So we just move on, and it's essentially the risk of transaction monitoring that really led to what I would use the word the de-risking that started happening for last couple of years, with the very large sizable penalties that were imposed on the banking sector, particularly the banks which are into the correspondent banking space, and those who are handling large amounts of funds transfer to Africa and Asia. They were penalized by European regulators and the American regulators. And a particular example that comes to my mind, and that will be really of interest, a leading English bank was penalized for handling a remittance of less than 100 US dollars that was made by a Sudanese diplomat to his family. And the reason was that Sudan was under sanctions. The bank had taken a view that it's a salary payment coming from diplomats' account held, whose embassy account was held by the bank, and money is going to the dependents of the diplomat. But for that $100 remittance that they handled, this bank had to pay a few $1 million as penalty. Now, commercially, any bank would like to avoid those kind of transactions going forward. It did create massive amount of human suffering, and a couple of years back, there were actions taken, social action, I would use the word, asking banks that they should not de-risk in a manner that throws the entire banking industry out of gear. And which is what I'm trying to say, that some regions are more affected than others, and some countries are found to be more affected than the larger ones. For reasons right or wrong, the problems that have happened in Africa, some of the countries which have faced recent warfare in Central Europe, all of a sudden the banks who handle the money transfer, they find themselves in a very difficult position. Just giving a theoretical color to what Elena had spoken about, as a correspondent bank, if we are handling the money on behalf of another bank, we have absolutely no visibility of where the money is coming in from, who the customer is, or what are their business activities. So if, let's say, Rabobank in Netherlands as a correspondent bank is trying to handle a remittance coming in from some other bank, let's say in South Korea, and I'm just using a random name, our relationship really is with that bank in South Korea, but we really don't know who the customer of South Korean bank is. And again, as an example was mentioned by Elena, is this money really coming in from South Korea, or is it originating from some other banks? So the chain is really, really long. as to who has originated the transaction, who's handling the money in between, and who the ultimate receiver of that money is. So quite often a correspondent bank would not even know as to the client where the money has to go. So Rabobank, for example, again taking the same example, the Rabobank in Netherlands might be asked to remit that money to another small cooperative bank somewhere operating in a district of Netherlands. It becomes a bigger challenge when we look in our own very large setup in India, where some of the larger banks actually act as a correspondent for some of the smaller banks. In India, with 1.5 billion people, with accounts running into a billion numbers right now, it's a massive challenge. How does the bank that's handling money really tries to address all these challenges? So now you really, when you go through these some of the issues here, what we are finding is that we as a bank, as a correspondent bank, have no idea about what the originating bank or the respondent bank is doing, what is their business model, what is their client base, what are their standards when they do the KYC, how detailed is their investigation of the client's business, how critical and tightly are the transactions being monitored. And all of this really creates a big challenge. Another point taking exactly from where Irina had mentioned, sometimes a false feeling of comfort or satisfaction may come in. Oh, I'm dealing with another bank and bank would have done everything. It gives a false sense of security. So if you as a bank in, let's say, in Austria is receiving or sending money to another institution, a false sense of security or inertia or complacency can come in, that okay, I'm only sending money to another bank or I'm receiving money from another bank, and they would do the necessary paperwork or necessary due diligence. So again, just to put it in a pictorial format, and it's a very simplistic respondent bank relationship, one on one, but we could have multiple participants here. So you have a client who's actually originating the transaction. I've used the word fintech deliberately because there'll be some of the issues that we'll touch base when we go down some of the slides, and we'll try to address on fintechs. That's the new reality that we have, and they are generating a lot of business, particularly for payments and the cross-border remittances. But assuming if it is not fintech, it could be any other institution in between, and then you could have multiple banks before, let's say, JP Morgan, who's a correspondent bank for Rabobank, receives money for benefit of Rabobank, which is correspondent bank here, and Rabobank then has to pass on money to whosoever the ultimate beneficiary is, ultimate beneficiary here. Now this chain could be pretty long when the money is being received by the respondent bank, and again very long before it reaches the ultimate beneficiary. And this is what we really see, the challenges that we face in correspondent banking business. If you keep aside the large value trade finance business, you will see a fairly large number of small payments coming in, and there will be numerous transactions. Again, as we spoke earlier, are we really knowing about what my client's client is doing? Who's originating that money? And if I have no idea as to what my clients are doing, or how rigid has been the KYC processes for onboarding the clients, then the risk of any correspondent bank or any bank in the chain becoming responsible as a pipeline for flow of dirty money, that risk really goes up dramatically. And that's very, very important. And that really brings me to this issue as to why do we think correspondent banking is a risky business? Now, uh, I think this particular sentence actually answers the poll that we had, where we said we are not facing much of difficulty about the correspondent banking business. In fact, one of the biggest challenge that the correspondent banks face is that they may not have sufficient understanding of the business of their counterparty bank or the relationship bank. Now, there could be risks which could be associated that we know a bank is handling, which could be with products, services, what kind of clients you have, what is the geographic location, and all these things really create their own set of risks. Now, it's a why would a geographical location create a problem for you? Now, I were to answer, if you know, and for example, Colombia has earned a bad name for being a haven for drug trafficking. As somebody, as a bank which is operating in Europe, if I find a client from that particular location, a question would naturally arise: is there a risk or a possibility that this client or this bank could be misused for routing dirty money? Now, it's not a comment on the bank per se, but in case in that geography, Colombia, as I just mentioned, if there's a lot of drug business happening, that money has to flow somehow. And the criminals, the drug traffickers would try to misuse, abuse the banking system. So it's not only one particular bank, but the banking industry as such in that particular geography is exposed to that particular risk. So that's what I really meant, and I thought it would be relevant for me to highlight as to what do we mean by geographical location risk. And then in case if those clients are dealing into, let's say, large number of retail activities, cash transactions, now you put these two things together, large amount of cash getting deposited in the account of the client, and that business happens to be operating in a location which is known to be a drug trafficker's haven. It's very easy for dirty money to flow in into the small businesses accounts. Again, I would like to narrate a particular instance when an investigation was carried out many years back in New York. They had found that the hot dog carts that were so popular on the streets of New York were the fronts for the drug traffickers. Nobody would know, whether they have sold 500 hot dogs or frankfurters, or they have sold 10, or they have sold 5,000. But the gentleman could come every day evening into the bank and deposit cash saying, I sold X many number of hot dogs. So that, what products or services are being given, what is the client profile, and where are you operating becomes very, very relevant. Again, transaction monitoring, and this is something that is extremely important for any correspondent banking business, both at a respondent side as also at a correspondent bank side. Uh, my experience shows, and experience from the industry shows, that transaction monitoring per se is relatively inadequate. Across the street, across the industry, we find a very large number of false positives or far too few alerts. What does it mean? That either the parameters that we have set for identifying potentially suspicious transaction is too tight, or these are too lax. And in case if there are far too many alerts, which then you find out are false positive, it gives potential of a risk that a true match can pass out sometime and you may not be able to identify. On the other side, if let's say there are far too few alerts coming in, then it's quite obvious that our parameters are not good enough, strong enough to capture that. So to address these two requirements that we spoke of, the FATF recommendations and Wolfsburg principles, basically, which is a group of bankers which had come together to lay down the client due diligence requirement for banking industry if you're offering the correspondent banking business. So these rules and regulations first came out in 2014 from Wolfsburg, and that questionnaire keeps on getting updated. I'm sure all the participants that we have here would either be asking for that questionnaire, or they would have been filling up those questionnaire when they want to use the correspondent banking business. FATF obviously came out with recommendations in 2012 first, which they are kept on getting updated. So 2020 is the latest questionnaire that we have. I would take a few minutes to just highlight some of the key recommendations that FATF has made. So recommendation number 10, which talks about...
Charan, just a quick heads
Yeah.
up.
Yeah.
Charan,
Yeah.
just a quick heads up. We have about 10 minutes left for your presentation. So maybe
Yeah.
we go very quickly through the actual
Exactly.
recommendations, but maybe spend
I'll
some
do
more
that.
time on the fintech part of it. Thanks.
Yeah, I'll just come to that. Thanks, Shirish.
Thanks.
So customer due diligence is a standard requirement that's already been built up for everyone, and these are available in the FATF booklet. So I would not like to spend too much of time, but during the discussion that we already had, we've got some sense that we as a bank really need to know our client inside out. not only is the identity and the document that we are taking, but what business they do, where do they operate, what kind of clients do they deal with. So it's KYCC and KYC put together. And that would really help you build up a customer risk profile. Where are they getting their funds from? What is the source of their capital and business? And the customer due diligence is an ongoing exercise. It's a continuing exercise. And if CDD is not completed for an existing relationship in due course of time, we as a bank or a correspondent bank can consider filing a suspicious action report or suspicious transaction report on the client. I would just jump to FATF recommendation number 13, which primarily deals with the core banking. As I've been saying time and again, specific guidelines were created for the correspondent banking business. And this is what really captures that if a bank is trying to offer correspondent banking business, it need to do a full due diligence and understand the business of the bank or the partner bank that it's trying to work with. In particular, I would like to highlight the reputation that institution enjoys, what is the quality of supervision in that country, what is the history of money laundering, terrorist financing, fines imposed within that country or on that particular bank, or any other regulatory action being taken. Uh, the FATF documentations, FATF publications, BIS publications are quite useful documents to help us make an assessment of the correspondent banking and CDD requirements there. Wolfsburg questionnaire, again, basically a whole host of issues that are being there and that's available. But it's an interesting thing that we really need to know. While the questions would be answered in a yes or no, and you can answer it, but there is no right or a wrong answer. As a correspondent bank, our job is to ask or report the actual situation that we have, the correct information that we have, and that accuracy of information is critical. If that information is found to be inaccurate or ambiguous, it really affects the correspondent banking relationship. Uh, I would like to just jump, and given that we have a short time, Shirish, I would like to possibly come to the fintech part, or there's a new development that's FATF had spoken about. So FATF had actually asked the bank should keep a track on continuously new developments that are happening. And one of that was really the technological developments. And when we talk in terms of technological development, money laundering, banking services, what really comes to my mind is these money or value transfer services, and fintechs actually fall into that category. And that's why this particular requirement of money or value transfer services slash fintech is a combination of client due diligence, which is recommendation number 10, and number 13, which is the correspondent banking relationship. Because let's say if your client is a fintech or a money changing services, you are essentially acting as a correspondent bank for that intermediary who's actually dealing with the client at the extreme end. And this is where the new technology comes in, which is what we are talking about. FATF has particularly asked banks that you need to focus attention on new technological developments, which can have an impact on your product that you are handling, or how the money laundering risk can come in from those particular products. Now, I thought the best way to understand the risks that we have is to actually learn from mistakes of others. And possibly in Central Europe and Scandinavia, the most spoken about case was the Danske Bank problem that we had about 2 years back. Danske Bank was really used for routing close to 200 billion from Estonia. Now, if you look at this chart, which I got from Graham Barrow, who's Graham Barrow actually, who's a leading uh, practitioner and theoretician on the banking, money laundering risk, etc. This chart very simply tells you Danske Bank, which was here in between, really got caught in a web of transactions initiated by clients they had no idea about. So you had a number of legal and individual persons who wanted to move money. It came from multiple Russian banks. It came from subsidiaries of Russian bank in Europe. I'm sorry, Russian subsidiary of a European bank, Russian subsidiary of a US bank, moved into Danske, and then again money moved out. Now, if you recollect, I had just spoken earlier that a lethargy that comes in, we are dealing with a bank to bank basis. This is the kind of a lethargy we are talking about. Danske and Estonia felt that, oh, money is coming from a bank, they would have done due diligence. Money going out, again, the same thing. Oh, the money, we are sending money to another large international bank, they will do the needful. But nobody knew where the money was going. And that really is a challenge in the correspondent banking that business that we face. So if I could just jump up, and this is the report. This is actually an image that I've taken from the investigation report that was carried out on Danske Bank. Now, if you notice, money was coming in from multiple countries, going to multiple countries, and these are all customers of non-resident portfolio. So Danske Bank, uh, Estonia was receiving money from multiple countries, multiple sources, remitting money to multiple sources, and nobody paid attention why money was coming in, why money was going out. That brings us to the responsibility of the transaction monitoring that we had spoken about earlier. Uh, Fintechs is something that I just spoke earlier. We as banks would be acting primarily as a correspondent for fintechs. Now, why I think fintechs are providing us a great opportunity in the banking sector for expansion of business, but they are also bringing huge amount of risk so far as the KYC money laundering issues are concerned. Now, while these slides would be available, Shirish, I presume I would just like to come to one slide that will give a summary of when banks are dealing with fintechs, are we really having a cultural clash? Now, obviously, historically, banks have been considered as conservative, we are process oriented, we are tradition bound, we would like to avoid and minimize risks, highly regulated. Banks have paid penalties, and that thought always remains in our mind. And then obviously we got multiple systems, so legacy systems can't be upgraded overnight, so we got those massive costs running. Compare that with the fintechs. The whole attitude of fintechs justifiably is they are market disruptors. They would like to build up large volumes. They would like to rely on third party service providers, technologies, APIs, which will help you complete your KYC, which will try to move funds. And the whole business model is premised how fast your app is downloaded and how fast are the clients uh, taken, and they don't really have a legacy cost. So now when you're comparing these two institutions who got to deal with each other, we have a time tested processes here, cost conscious, at the same time risk averse. On the other side, you have an institution which is in a great hurry to build up the business, funded by PEs, money is not a problem, they don't have legacy costs. So I think banks and fintechs, though they can be great partners for building business, also have huge cultural challenges. But coming back as a correspondent bank, what we really need to be doing, I think we need to create an environment, we need to create mechanisms that helps build up a safety net for us, a safety moat for us. How will we do that? Effective AML program, CDD, which is connected to one, and most important is the transaction monitoring. Most banks seem to falter on the issue of transaction monitoring because these are large volumes, multiple payments, and as I said, bank to bank transactions, no visibility on the end customer or the originating customer, and that creates its own risk to the banks, but that also creates an incentive for the criminals, money launderers to abuse the banking system. uh, Shirish, given that time conscious of that, I would like to stop it here. Uh, and I think we'll be very happy to take questions that may come up.
Thank you, Charan. Thank you for that presentation. Elena and Sharon, both of you, thank you so much for being here today at this webinar, sharing your knowledge, taking time out. I'm sure if the participants have any follow-up questions, if they send it to us, we may forward it to you. And if you have the time, please feel free to get back to them.
By all
Participants,
means.
thank you so much for listening patiently and for asking questions. If there are any topics on which you would like Fintelekt to organize another session, either let us know or let the association know. And for those of you who missed my announcement earlier, just in case you joined in late, please note that all of you who attended today will receive a participation certificate. And to receive the certificate, you need to register free on fintelekt.academy and you will receive the certificate within 7 days. Once again, I thank Istvan and the Banking Association of Central and Eastern Europe for partnering with us today at this webinar. And we look forward to doing many more. Istvan, maybe if you'd like to say a few closing words.
Yes, thank you very much. It was a great event, and I am really keen on continuing our cooperation. So let me announce that Fintelekt is invited to take part in our payment conference on the 25th of June. It will be again a great event with 300, 400 people, and Fintelekt will contribute, I'm sure, largely to the success of the program. Thank you very much.
Thank you, Istvan. Elena and Sharan, thank you so much again. And good seeing you. Have a great day.
Thank you very much. It was a pleasure to be here.
Thank you, Shirish. It was a very big pleasure. Thank you.
Thanks. Bye.